Hello and welcome back to the second part of this video, in which we will have a look at the FAQs in order to answer a very important question, which is what are the prohibited practices for the challenges. We click here on the menu, we click on FAQ, and this is the actual first question that is available here in the popular article, because it is the most popular article out there. But there are a lot of other information. I really invite you to have a look at all the different FAQs that are available here in this page. As you can see, there are a lot of general information to explain you what is prop trading, how to get started, about the challenges, to explain you the comparison. I will be sharing with you a lot of knowledge, but you can also find this knowledge within the FAQ. As you can see here, it's very complete with very interesting information, including the affiliate program and the trading rules. And the question is here, but we can find it in the first spot here in the popular article. Let's click on it. Because it's important to be really transparent and not have any bad surprises while trading our challenge, we will have a look at the prohibited practices to avoid while trading a challenge. So the first one is holding shares during earning. There are some earning seasons in which the figures will be released. It's important, if you're trading shares, to close all the share position by 3:50 p.m. Eastern Time on the day of the release. Also, if an aftermarket release, then on the preceding day. For everybody out there trading stocks, important to understand not to close during that time frame to avoid having your challenge being failed. Now, arbitrage and latency. I know a lot about arbitrage, latency arbitrage. This is a practice that has been used for over a decade. You're using a software that is taking advantage of the speed between one server and another server. That's not trading. That's not scalable. You cannot do it with very high volume. It is dependent on the speeds of a server against a slower speed of another server. In real trading term, it's called toxic trading. We won't use any arbitrage, EAs, and any type of latency trading. Let's continue now. System exploits. What is it? It's to take unfair advantage of the platform. As we know, when we are passing the challenge, we are trading on demo platform. The demo server can be overloaded, can have also certain, let's say, speed issues or whatever. Any behavior that will take advantage of certain errors of the demo platform will lead you to fail the challenge. Basically, what do we have so far? We have anyone who's taking advantage of the speed, of the demo, of the platform being frozen. The objective is to be a prop funded trader, is to trade long term. Taking advantage of the platform is not being considered trading. So once again, it makes totally sense. What about hedging? Hedging is basically buying and selling similar instruments either in the same account or different account, or even using different platform. While trader will take advantage of this, because basically there are a lot of different manipulations that are used within hedging. Once you are hedged, you're not actually making profit by buying and selling the same instrument at the same volume. But there are certain practices in which you can take advantage of the platform, and that is why hedging has no place within the TradingCult platform. I totally understand that. In any case, we don't intend to use any of the strategies so far. If you're actually looking to trade, so far the conditions are really fair. So let's continue. High frequency trading, it's also linked to the latency arbitrage, to all this speed trading, in which you will use EAs to open, close positions and take advantage of the platform. So high frequency trading, basically it's about opening, closing several positions within milliseconds. Once again, the high frequency trading is very technology sensitive. It can work one day, it can be a total disaster. Another day, it can take advantage of certain features of the platform, and this is not something that is highly scalable. Looking into being prop trader and maybe trading up to $1 million account, high frequency trading, if it was that easy, then you don't need no prop trading. You can just multiply your own funds without having to use the company's funds to leverage the potential danger. That's why it's not accepted. The tick scalping is also similar. It's less, let's say, frequent or fast as the high frequency trading, but it's still a high speed trading, high speed scalping That's why we have a rule here that you can't open several positions with an interval of less than 1 minute, and also holding the position less than 1 minute. So these two rules are extremely important for you to remember. You can't open and close a position within 1 minute, and you can't open a position and open a second one within 1 minute. So scalping, high frequency trading falls into that, because they open and close position within seconds and open several positions within seconds. So that's the reason why it is not allowed. We continue with the one-sided bet. So what is a one-sided bet? Is basically continuously trading on one side. Let's say you sell euro dollar, you sell again, expecting for the market to go in your favor over time. But this strategy is extremely risky, with potentially a very, very negative risk to reward ratio, meaning a very high risk and a high exposure to potentially very limited profit. That's the reason why the prop firm doesn't have any interest in getting this type of trader. This is not a strategy that is scalable, and this is not a strategy that will potentially really work in time. Sharing your account, the purpose is to become a trader, not to pass the login to somebody else for him to become your trader or her. Zero tolerance approach in this matter. All-in-one bet, it's about opening one position and basically flipping a coin, trying to make it or break it. But that's not trading neither, that's pure gambling, which is also leads us to the next point, which is the martingale. The martingale, it's about buying constantly or selling constantly a certain instrument, certain positions with a multiplicator. Basically, this is mathematical form of gambling that initiated in the gambling, in the casinos, and it's as well extremely risky, because if the market continues to go against you and you continue multiplying, then you have a risk of total loss. That's why it's prohibited. And we will finish with the copy trading, reverse copy trading. Once again, the purpose is to find traders. If somebody is copying another trader, then the master, the one giving the signals, is the trader. The one following is just an investor. If you have 50 people copying someone, then if this person passed the challenge, the other 50 people pass the challenge without actually doing any trading or having any different type of strategy. And the exposure for the prop firm is multiplied by 50, because if suddenly this trader burns his account and loses everything, then all those followers also will lose everything. It just makes perfect sense. There is nothing too strict out there. We are really looking forward to get into the trading of our new challenge. Until then, happy trading and see you soon. Bye bye.